Hi, it's Amanda DeVito Parle. Welcome to my podcast, At the Kitchen Table, where we will guide, inspire, and connect.
Hi, how are you?
I'm doing great, Amanda. How are you?
I'm good. Well, I'd like to welcome Greg Osborne to At the Kitchen Table, which is our podcast. We just try and connect and inspire entrepreneurs. I mean, a recession is defined by 2 consecutive quarters of GDP decline, right?
Correct.
Okay, so are we in a recession?
Another huge question. Really, it depends on who you ask. If you believe the numbers, technically, no, we're not in a recession.
We've been staving it off for months, or for quarters.
Yes, but if you ask a restaurant owner who just closed his restaurant of 40 years, I just read about a restaurant, was it in Arvada? The family restaurant that closed after 40 years. I mean, there are hundreds, maybe thousands of these family-owned restaurants that are just going out of business. Mm-hmm. If you ask them if if we're in a recession, they will say absolutely.
Right.
You know, I'm getting destroyed. I can't pay the freight on my debt because the Fed hiked so aggressively, 550 basis points over a 6-month term. That was a very rapid hike in interest rates.
Right.
More so, I mean, the last one that I remember was 96, when and the one before that was, I guess it was, 78 with Paul Volcker. I mean, staving off inflation, rates increased rapidly, which rippled through the economy and destroyed a lot of businesses in the meantime. And that ultimately, you destroy that many businesses, and ultimately it seeps through the consumer confidence throughout the economy, and people stop spending money, and we are in a recession.
So how do you explain then these consecutive quarters of increased employment? Because that's the other number that's driving this. If businesses are shutting down and people are closing their doors, in theory, you should see the unemployment rate going up.
Correct.
And the unemployment rate isn't going up, which is why the markets are confused. This is all part of the reason why the markets get confused, right?
Right, exactly. You ask such great questions. You're asking all of the right questions.
Okay, thanks.
So my answer as a layperson is, do you believe the numbers?
Right.
So let's just look at the employment numbers, which, there are a couple of ways to look at the employment numbers. One is the BLM survey, the Bureau of Labor Management survey, that comes out with their monthly report every month. And then there's the household survey, which is a completely different metric. You may recall, I think it was in November, there was an adjustment downward in the BLM numbers of 875,000 jobs, almost 1 million jobs, which means that the BLM reports that had been issued throughout the year, if they were adjusted downward by almost 1 million jobs, they weren't accurate to begin with.
That's right.
And meanwhile,
everybody's hanging on this data. Meanwhile, everybody's hanging on the data, right? And the numbers aren't right.
Correct.
Where are they sourcing these numbers from? Is it just from payroll companies like ADP and Paychecks? Where do they get these numbers from?
That's one place, and that's the other problem here. I mean, the transparency in the data is very problematic. It's almost as if the powers that be are propping up the house of cards with these reports, which are later downwardly revised. Why would they do that? The Fed is supposed to be apolitical. Are they? I don't know. So the monkeying with the numbers, a lot of times these government statistics their definitions are changed over time. Take for example, the CPI. The CPI is the Consumer Price Index, which is
what does it measure?
It measures the cost of a basket of goods over time.
Okay.
And that's all fine and good. What is the basket of goods? Well, it should range from everything. It's the stuff that people pay for, everything from automobiles to eggs. What's happened over the recent memory is that certain key consumer products have been removed from the basket. So food and energy are not components of CPI. Well, okay. Well, while gas prices have certainly come down of late,
energy prices are in that number?
Yes.
But food prices are not.
Food and energy are removed from that number.
Oh, food and energy are removed from the number.
Right.
You said that.
But the average consumer buys gasoline and eggs, every week. Mm-hmm. So what is the true cost? If you're excluding the stuff that most people buy from the calculation, is that an accurate number or not? And that's what the bond market is questioning. It's like, wait a second. Number one, these employment numbers keep getting revised downward. And number two, on CPI, you're removing key consumer goods from your metric. Yet, I just got back from the grocery store and paid $9 for a carton of eggs or whatever it is. Yeah. They're calling BS. I don't believe it. So
is there a way to put that back into the number?
Well, there is, but the powers that be, meaning the government, would have to decide to do that. And I don't want to be cynical.
Because you're an optimist. You already told me you're an optimist.
I am an optimist, but I got to tell you, at age 61, I'm getting pretty crusty.
Yeah.
Because it seems like there's a lot of smoke and mirrors going on with these government reports, upon which all of us are trying to make investment and life decisions
for our little businesses here. Yeah,
that's why, back to my opening comment, it's a treacherous landscape, because the smart money doesn't believe the numbers, only because the numbers are constantly monkeyed with.
So we got monkey business in the background, except that we still have to run businesses.
Mm-hmm.
So how is it that you reconcile that just day to day? How is it that you choose to continue to run a business? Is it that you are very conservative in your math? Is it that you take an extra moment to hesitate before making an investment? Or is it that you take some leaps of faith to make the investment? Like, how does one, knowing the smoke and mirrors, and maybe that the curtain isn't pulled back and that, we're operating under toothpicks and playing cards, if that's what you say it is, which I tend to feel that way too. A lot of this stuff just doesn't make sense to me. So how is it that you persevere, that you go on, that you keep running the business?
Wow, that's another big question. So I am conservative, and I think that fiscal conservatism for business people is paramount.
Yeah.
Particularly in this landscape. I think it's critical that investors maintain a stash of liquidity so that if things don't turn out the way that you plan, you can ride out the storm for a period of time. The question is how long. But at the same time, savers aren't getting paid, or until recently haven't been getting paid to keep cash. So you've got to put it to work somewhere. Where can I put it to work in the place of least risk? And for everybody,
this feels like part two of our conversation, which is I want to go down that gold, silver, lead conversation and physical assets. So why not keep cash, and why put your cash to work, and how? What are the places to put your cash to work?
Well, I'll give you my disclaimer. I am not an investment advisor.
All right.
And you should not take any of my advice as investment
just personally,
advice.
Well, how are you investing?
I'm investing in loans. I'm investing in loans, and
loans that are backed by
collateral, by hard assets, by a house,
which is a physical asset, right?
Exactly, and in part it's because that's what I know, and I'm an old dog, and I don't particularly want to learn new tricks, particularly because things are so untransparent. For me, given my lifetime experience, I think I can value a house. And if I leave myself enough margin of error in my loan to value ratio, and I make, good loans to good people who do their very best to execute, I think I can hedge my risk.
Right.
And if I have to take one back, I think I can, based on the loans I choose to make, I think I could probably finish the construction and get it back on market and get my principal back with at break even or better. So I think prudence is the watchword. We have to be very prudent, and my approach is investing in stuff that I understand,
yep,
and not investing in stuff that I don't understand. Mm-hmm. I haven't always done that, and some of the best economics I've learned are taking flyers on stuff that I don't understand and realize, oh well, that didn't work.
Yes.
So, I'm at the point in my life and career where I stay in my lane.
Well, and it's interesting. That's sort of the purpose of this podcast for me, is that I understand this vein, And I want people to understand the vein, because I do feel like when knowledge is power, when people's cups are full of information, they can make good decisions. The more information they have on a particular topic, the more likely they are to invest and become sort of an expert of sorts in the field.
Right.
And so, understanding real estate, understanding the physical asset, that's one thing.
Yes.
You also invest in physical assets like gold, silver, and lead.
I do.
What does that mean? How are you buying it? What are you doing with it? Where do you keep it? Well, not maybe you particularly. Your last name will be on the internet.
Yeah.
But do people physically actually keep it? Do they put it in safes? Do they own it is there an institution that holds it? Is it really physical? Is it in the ground? Are they tokens?
All magnificent questions. Let's start with my lending business. The assets that secure my loans are based in Colorado, so that I can drive to them, I can see them, I can employ local people to bail me out if a loan goes south. That's why I don't make loans out of state. It's too risky for me, because the further away from me the asset is, the more risk I have in managing the asset and preserving my principal. That goes for everything else. So there are a lot of ways to buy precious metals if one wants to do that. You can buy an ETF. A precious metals ETF.
What's an ETF?
An exchange traded fund that is focused primarily on the price of the asset, but you do not take possession of the underlying asset.
Okay.
Somebody else does. Usually, the investment manager or the promoter, and you're basically playing off price.
And trusting that they have the physical asset?
Yes.
I mean, are they required to actually keep the physical asset?
It depends on the asset. We're getting way
down in the weeds,
here,
yeah,
but
sorry.
that's okay. That's what you want to do. My approach is, if I'm going to invest in precious metals, I want to take possession.
Of it. Okay.
I do. If I buy physical, I take possession and store it in a safe location.
Right. Yeah, in a bunker.
Well, that's the downside of it. They say the downside of investing in gold is, or silver is, it's only as safe as the location you can protect.
Sure. I have a cousin. I should interview him. His name's Peter. He is tokenizing gold that is unmined, basically. So they own the lands for which they know that the physical asset exists in the ground, but it's very expensive to mine it out of the ground. And so they aren't mining it out of the ground. They're just leaving it in the ground and selling the asset.
So is he investing in miners?
I don't know who or how. So again, I'll have to interview him. But I just thought this is sort of a new concept, right? Where they're not actually mining out the gold. They're keeping the land.
Yeah, the rights, basically, the mineral rights or what have you. I mean, there are a lot of ways to skin that cat.
Okay.
And metals prices over the last couple of years have risen exponentially, in part because people are seeking a hedge against the dollar currency. I mean, back to the inflation story. I mean, if the dollar is not holding value by virtue of its dilution through inflation, what will hold value? Well, traditionally, physical assets, real estate, metals, the like, have been inflation hedges because of their physical nature.
Right. They fight against it.
Yes.
What else? What are like hiding assets? Hiding assets that are physical assets that people don't typically think about, but are also not real estate and not metals, but something else that's considered a physical asset. Those two things are the only ones I can ever come up with in my mind. Are there other hiding physical assets or things that people could invest into hedging?
What do you mean by hiding?
Well, just like not commonly known.
Oh, okay. The definition of real assets is in the eye of the beholder. You were going to ask me about Bitcoin, and I told you that I know nothing about Bitcoin, even though I've really tried to understand it. I just don't, and therefore it's not for me. It might be for other people, but it's just not for me.
Because it's really not like a physical thing, right? There's not a physical Bitcoin. It's like a technology Bitcoin. It's an electronic Bitcoin?
Yes. As far as I can tell, that's what it is.
All right, we'll do our part to find a Bitcoin person.
Yeah, you should get a Bitcoin person in here for sure.
Yeah,
because people believe in it, and in theory, it has its appeal from a privacy standpoint and a limitation of issuance standpoint.
And it detaches itself from the federal government, too, which was one of the things you sort of said is cloudy or murky.
Exactly. But my question is, there's an enormous amount of power and energy that's required to mine Bitcoin and validate these transactions.
This is why we should buy Greenland.
Well, yes, absolutely. Say what you want about Trump, but he's no dummy.
Well, I think the thing that's been interesting for me most recently is just he says some of these things and I go like, oh, I didn't even think about that. I didn't even think like one could buy another territory and expand. And so that's part of what they're looking at is for the Bitcoin. It's very hot apparently to mine. And so if you can take the production to colder temperatures, it's easier to keep the buildings cooler and some other things like this. But
anyway, of that. I mean, it's a fascinating thing to study. Yeah. It really is, and it's new.
And I've thoroughly taken you down a wormhole that, we don't have to go down. But I guess maybe to sort of, wrap this up or put a cherry on it is, I wonder what kind of advice do you give people when they're both investing in real estate and borrowing money, and maybe from your experience as a consumer lender and now as a private lender, like what advice do you give people when you're having conversations like this or when somebody asks?
My advice right now is to be extremely careful. You've heard the term everything bubble. And, by virtue of the easy money that we've had for a couple of decades, all of these asset prices have escalated to points of madness. And at some point, there's always a reversion to the mean. That's just basic statistics. There's a reversion to the mean. I mean, these prices can't go up forever.
Right.
At some point, something's got to give. Mm-hmm. I mean, you look at the stock market right now. So I do hold stocks. I have an investment advisor who manages that entire portfolio. I don't do any of it. I just have a person I trust who manages the portfolio for me, given my risk profile. But some of these, these stock multiples are off the charts on companies that don't generate profit, but they're the darlings. I mean, I'm a simple guy. I mean,
right. It's got to make money. If it makes money, I'll invest in it. If it doesn't make money, I don't want to. So if it doesn't make money, why are we investing in it?
Well, people invest in it because they believe that the idea will pan off in a huge multiple over time. Mm-hmm. That's fine and good, but I wouldn't bet the farm on it. I mean, everybody likes to take a flyer now and then just to see if it works. Some of them do, some of them don't. Everybody seems to be waiting for the reckoning, the reconciliation of the everything bubble, where the reversion to mean takes place and where these prices on whatever we're talking about, revert to, their mean value over an extended period of time. And after such a long time of asset prices being through the roof, reversion to the mean doesn't mean coming back to the mean. It means dropping below the line so that, the average over time is the mean.
Yes, I see.
Or the calculation over time is the mean. So it's a treacherous landscape. Everybody's wondering, what do I do? My advice is, look, be prudent, be conservative, run your numbers, be confident in your ability to execute your business plan, be disciplined in executing your business plan, and keep some powder dry. I mean, there's going to be a huge opportunity if there is a reversion to the mean or a collapse in asset prices. Somebody's going to snap them up at a discount.
That's right.
And there's a huge amount of liquidity on the sidelines in whatever asset class you want to talk about to purchase this stuff when and if a correction occurs. And it will occur. That's the nature of the beast. It's just a matter of when.
Right.
So it's time to be really careful.
All right.
It really is, and maintain some liquidity. Mm-hmm. Maintain liquidity, it's a balancing act, and it's hard right now. But be careful. There's a lot of deception out there, and if it doesn't make sense, don't do it.
That's right.
That's how I live my life. I've got to understand it. Again, I'm a simple man and have very limited understanding of anything really, but I got to understand it in order to be comfortable with it and deploy capital.
Thank you for coming.
Thank you for having me.
Greg
You asked
Osborne.
hard questions,
Yeah.
Amanda.
Oh, I know.
It's one of
Well,
the many
you were
reasons
real
I
good
love
and you were very interesting. And I don't know how long we talked, but it was a long time